Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis is for Monday, November 1st through Friday, November 5th, 2010. Well, as you can see in front of you, you are looking at the 5-day period of last week on the SPY, which mirrors the S&P 500. You can see the trend lines. Those are your major trend lines that are going to be key in the coming week. Everything you're looking at here on the chart is key to next week. So again, let's just refresh what happened last week. Last week turned out to be an extremely flat week. You had some volatility in there, which was nice for traders, those of us in the intraday stock chat at InTheMoneyStocks.com. It was very nice to get that volatility. However, again, the gap up on Monday from last Friday's close, take a look. Big gap up, and then you sold off to close at the lows of the day, but still positive from the close on Friday. Tuesday, we gapped lower, filling that gap. The market surged to the upside, came into gap fill, came off, and then pulled back and closed right there at gap fill. Wednesday, we saw a massive move to the downside early. The market stayed lower until about 1 o'clock, 1:30 p.m. Eastern Time, and then a big buy program came in on anticipation of POMO for the following day. And remember, POMO stands for Permanent Open Market Operations by the Federal Reserve. The basic way the Federal Reserve has been propping the market up and manipulating the market over the last couple months, really since the rally started when the SPY was trading at 104.50. Now, again, as the market surged up here, that was everyone buying in on anticipation of POMO. POMO worked perfectly with the gap up the next day, but then once that gap up occurred, all these people right here said, I got to sell this market. I bought yesterday low, now I'm going to sell high, and they sold. That brought the market right back in. You can see the selling continued to about midday, and then the markets in the afternoon on very light volume floated sideways to higher the rest of the day and ended with a small gain. Friday turned out to be a very flat day. Fridays over the past really couple weeks, if not 3 or 4 weeks, have been extremely quiet. If I zoom out just a little bit more, take a look at the previous Friday. Look at this, choppy sideways. What about on last Friday? You can see choppy sideways, although a little bit more volatility. Now, I think that's jockeying going into this coming week, and I'm going to explain why this week is so important. What I'm going to do now is just zoom in a little bit more so you guys can get a good view of last Thursday and Friday's action. Friday, again, very just choppy sideways action. Thursday was a little bit of a bigger gap up on that POMO, and then everyone sold into the POMO right there. But the bottom line is this, folks. This coming week is going to be the biggest week of the year in my anticipation. All right, that's the bottom line. Why? Because Tuesday, you have the elections. Now, the elections themselves, in my opinion, are not going to cause a major fluctuation in the market. But what we're going to get is on Wednesday and Thursday and Friday of this coming week, you're going to get clarity on the financial situation in regards to what the politicians are probably going to do. Are you going to have Republicans taking over both the House and the Senate, just the House? I mean, how is it going to play out here? And then ultimately, how does that affect the big picture on the economic front and on the kind of the policy front? All right, so that's going to be impressive for the markets and important for the markets. But really what it is then is Wednesday. Wednesday, what you're going to have, and I'll flip to the daily chart, let you guys take a look at the overall daily chart. There's your rally going back about 2 months, and look at the monstrous rally we've had. And this is what the key is in the rally. It's not because of the elections, folks. That's not right. The massive rally we have seen is pure and simple off of QE2 anticipation. The Federal Reserve, again, on Wednesday at 2:15 has or concludes their policy meeting and will announce to the market how much QE2 they're going to do. Is it going to be $1 trillion? Is it going to be $500 billion? Is it going to be $2 trillion? Ultimately, how much more energy or drugs is the Federal Reserve going to inject into the market to keep the high going? And that's really all it is, folks. I mean, let's keep an eye on this and understand. Call a spade a spade. That's exactly what it is. It's a drug addict, which is the market, needing more and more money, or more and more kind of money pumped into the system or into the vein of the market to continue to have these new highs and continue to make these new highs. And again, that's the reason why this rally has occurred all the way up. And it's been a huge rally. NASDAQ, I think, is up well over 20%. S&P's up about 15% in 2 months. I mean, we're talking about unbelievable rallies here that have not happened in a long, long time. But that is the way it's gone. And again, the question will be answered at 2:15 on Wednesday. So as you can see, this week is shaping up to be huge. Monday will be very, very quiet. Again, As far as I know, Monday will be very quiet. I'm kind of doing this video here on Sunday. There's not a lot of news that I've heard. We'll watch the futures tonight. The market on Monday will probably move in addition to the dollar. Wherever the dollar moves, the market will go the opposite way in a little way. But I expect a generally flat day ahead of the elections. And I think Tuesday will be a very quiet day for the most part as well as we hear the election results. Maybe you'll get a little fluctuation if it looks like the Republicans are going to take the House and the Senate. And then Wednesday's the big day. 2:15 p.m. Eastern Time. Be ready for volatility. Be ready for craziness. It will begin. Then what we have is Thursday jobless claims and Friday the unemployment rate, which is huge again. So unemployment rate, non-farm payrolls on Friday, that's going to be even bigger. By the way, folks, we're going to be doing a no-hype live broadcast Friday morning for our premium members of the Research Center. If you're a Research Center member, you can be live in this. You'll be able to see the charts. I will give play-by-play as these numbers come out. We will be discussing what they mean, giving plays off of the rest of the current week and the following week, how to play this number, and also, again, folks, if you're in the intraday stock chat, we'll be taking you live through the key data coming out at 2:15 on Wednesday, which, again, is the key FOMC policy statement. All right, so again, it's going to be a wild week. As you can see, Tuesday, big news. Wednesday, big news. Thursday, jobless claims should be decent news. Friday, huge news on non-farm payrolls. This is going to set up for a wild week, folks. We've been having very quiet weeks, and one thing I want to just point out here is that if you take last Friday's close to this last Friday here, so 2 Fridays ago to this past Friday, we really didn't go anywhere, right? I mean, just draw your trend line. I mean, take a look at that, folks. You ended just fractionally higher after the whole week of trading. And that just shows you, again, that, the market's been pretty much in a neutral setting. And you can see even going back again here, you're not that far away from it. We're basically, this is where we are in the last 2 weeks. You have a little bit of an uptrend, minor uptrend, as you can see. Here's from 2 Fridays ago, actually 3 Fridays ago at this point from the 13th. But nonetheless, look at that movement right there. Or check that just about 2 Fridays ago. Nonetheless, just sideways trading right there. And again, that's just telling you that the market's anticipating and waiting to hear the QE2 news, non-farm payroll news. And again, that's going to be the big news of this week. Other than that, folks, you have to continue to watch the dollar. The dollar has made a little bit of a bottom, it appears. Look at the daily dollar chart here. Here's your bottom put in. Jump, pull back, jump, pull back. It's not exactly that the dollar is going higher. The dollar has just stopped falling. If the dollar takes out 22 on the UUP, watch out below. It will become another issue here on a breakdown that could throw a curveball at the markets if the dollar does take out 22. I don't necessarily think it's going to be a huge positive for the market because there's no support below that. And this is my one worry. Yes, the dollar moving lower is good for the markets, but if you take out that double bottom going all the way back, and let me show you the weekly here, this double bottom right down here from November 2009, and we're now in November 2010 coming in on this Monday, that could be very, very ugly for the markets because the dollar has no major support below there. And the question is, can the Fed stop the fall? The Fed's been pushing the dollar down day after day, month after month over the last, look at this drop in the dollar. It's, again, a huge, huge drop. You're talking about well over 10% drop in the dollar here. But can they stop the dollar if you take out the double bottom, or is it going to go into free fall? I don't think you'll have a collapse on the dollar. That would surprise me, but you never know. You got to be ready for these type of things, folks. And again, the dollar being slowly lowered is good for the markets. If it goes into free fall, the markets will be freaked out. All right, so these are all little things that you have to watch this week. I mean, there's so many keys to the market, and again, we will cover them and give you swing trades and give you the analysis and guidance and education and teach our proprietary methods in that research center. The key is you got to join, folks. Bottom line. All right, and again, $49.99 a month. Get you everything listed under the Research Center. And again, watch this week as we debut our new website. I'm looking forward to it. And again, should be an easier to use website. We're going to be adding new features as always. It's just an exciting time here in the markets now that we're getting into this key QE2 announcement. Non-farm payrolls, elections will be over. Things will be back to normal action trading. And again, I look forward to it and making tons of money with all of you in the intraday stock chat and the Research Center. Gold, keep an eye on gold, folks. Again, gold has been trading to the upside, although it has pulled back. You can see you have a little bit of a bear flag pattern here on the GLD. We want to keep a close eye on that bear flag. That could be telling us a little bit more of a breakdown's coming. You can see sharp down, sideways, choppy up. That's usually in spirit of bear flag. USO has just been going crazy, kind of going just choppy sideways here. Overall, this is your big resistance area up here. Major support down here. I would say whichever way you take out, you will go substantially in that direction. So if you take out this down here, look for a major drop there. And if you take out all the way up here in this area, look for a major move to the upside in that respect, okay? So again, that's key. Also, earnings-wise, not a ton of earnings this week that are major. Really, we're past Apple, Amazon, Google. I mean, the big boys have reported. Microsoft reported last week. We also saw Goldman Sachs and the rest of them report a couple weeks ago. So earnings are kind of going away now. Now it's time to focus on the economic news, the QE2 news. And again, we're going to watch to see how much stimulus is put in. And again, it's going to be interesting to see the political side of this as well, in my opinion. How much craziness goes on. What kind of things are being said in regards to how much QE2. I mean, a lot of politicians are behind it. A lot of politicians understand what the Fed is trying to do, which is manipulate the market and manipulate the dollar to keep the markets up and create a false wealth effect. But there's a lot of politicians that understand, like I do, the long-term consequences of doing this, which is ultimately you will have major dilution, major collapse in the dollar, and you will ultimately just be digging yourself into a new bubble, the likes of which will be far bigger than the financial crisis. And mark this words right now. If the Fed continues on this path, there will be a bigger crisis in 3 to 5 years, maybe 6 or so, but again, towards the middle portion of this 10-year span from 2010 to 2020, and that will turn out to be the biggest crisis this world has ever faced, not just this country. Mark those words, folks. All right, come join the Research Center. Come join the chat room. Be ready for a wild week. I will be posting new alerts in the Research Center this evening going into next week so we can play some things. I'll talk to you soon. Take care.